This video is all about the Florida housing market crash and how it accelerates the economic crisis that we are all experiencing. So if learning more about that is your thing, then please keep watching. Boom! Boom, we're live. Here are the facts. Boca Raton home sales dropped by 30%. Boynton Beach home sales dropped by 35%. Delray Beach home sales dropped by 40%. That's where we are, and frankly, that's not true. That's where we were last month. So let's talk about what's happening right now and some of the recent things that have happened, some of the new information that's out there so that we can go out there and make the best decisions for ourselves, for our family, and for our financial bottom line. If you're new to the channel, welcome. And if you're a returning viewer, I truly appreciate that you continue to participate in my journey. I am committed to creating the most comprehensive content so that you can go out there, make the best decisions, and get exactly what you want despite market conditions. After an amazing summer, I am pleased to say that my kids are back in school. And so, like any other parent, I suspect I was super excited for them to go off to school, and I was even more excited to pick them up from school and hear about their day. I want to share a funny thing that happened, and actually funny is not the right word. I want to share an experience that happened because I'm curious if any of you have experienced what I'm about to share. So school started. Like any parent, we were super excited to drop our kids off at school, and then we were equally excited to pick them up and hear about their day. Started school on Tuesday. It was an incredible day. They love their teachers. They love their class. They love their friends. It's about as good of a day as you could possibly ever want for your elementary school kid to experience. So we were super excited to hear about their day. And, frankly, I'm always excited to hear about their day. But they're back in school. Our schedules are starting to normalize a little bit. I always carve out time to ensure that I'm able to hear about their day and frankly get as much information as I possibly can. I'm a nosy dad. I'm extremely interested. I am extremely involved. I want to know everything there is to know about everything as far as school is concerned. And so this week was progressing. They're having a great time. We're getting used to the new schedule. Wednesday evening, which was the second day of school, my daughter came home. I happened to be working. She knocked on the door. She was extremely excited and clearly wanted to talk to me, clearly wanted to tell me something. And it seemed as though she had a burning desire to let me know this hilarious story that she was about to share. And so, but unusually, she asked to speak to me in private. So that's what we did. And we had a little moment, and she's telling me about her day. But what she shared with me, I was not prepared for. I'm sharing it with you now because I'm curious if you've experienced this or what your thoughts might be on the subject. But nonetheless, as we were sitting there having this little moment and I'm preparing to hear what I think is going to be this hilarious joke or story, my daughter proceeds to tell me there's a boy in her class that is transitioning to be a girl. And they let the kids know. And this boy who they knew from last year is now wearing a skirt, has a long hair, has a ponytail, and has a new name. And my daughter, frankly, was expecting, I don't know what kind of reaction she was expecting from me. I think she thought I was going to laugh or tease or make fun of, which I am totally capable of because I like to think I'm a pretty funny person, but I did not react that way. But truthfully, I was completely unprepared for this conversation and I really hadn't thought about it very much. And I knew that I could not get the answer wrong or emote in a way that would potentially give her some sort of hesitation, reservation, bias, or prejudice. So I knew this was a very important moment. I knew it was a very serious moment, and I knew that I really needed to get my answer right. And if you know me, then you know that I like to prepare. I like to do research. I like to do my due diligence. I always want to have a plan. I always want to be informed so I can give the best answer. As I mentioned, I was completely unprepared. So I let her talk. She told me her story, and my other daughter came in, and now the three of us are having this conversation. My wife wasn't home at that point, so it was just the three of us and the dog. I knew the importance of the moment, and I knew I had to get it right. Continue to listen. When she finished, it was clear to me, and she was going to take whatever I said next very seriously. So I paused for a moment. I said, wow, that's kind of interesting. I'm not really familiar with that very much, but I do have a question for you. Is this person nice? And she said, yeah, they're very nice. I said, okay. Is this somebody that you want to be friends with? And I said, yeah, we want to be friends with them. And I said, great, because my feeling on the subject is tremendous empathy. I could not possibly understand what this person is going through, what this person and their family is going through. I can't even pretend to imagine how difficult and how challenging that's going to be for them. And really, my answer wasn't very hard. Is this person nice? The answer is yes. That's good. But honestly, without getting caught up in my own mind, my own biases, my own upbringing, my own anything, I mean, I realize I'm 47 years old. I probably think like a dinosaur relative to most younger people, but I knew my answer was pretty cut and dry. You can be kind to them, you can be empathetic to them, and if you want to be friends with them, then I'd encourage you to be friends with them, but certainly be friendly. But I landed on treat other people the same way that you would want to be treated. And after I concluded my answer, in my mind, I'm thinking to myself, I think I did a good job. And my other daughter then proceeded to inform me that she wants to be a unicorn. And so I let her know as long as she was a nice unicorn, I would treat her with kindness and empathy, and we could be friends. And then we moved on to the next thing because their attention span is not very long. And I think we jumped into the pool. I'm curious, do any of you have any experience with this? Is this something that you've seen in your schools? And if you do, please share it down below because I would love to hear your experience. I'd love to hear your stories. And let's dive into it right now. So, as of yesterday in Jackson Hole, Chairman Jerome Powell went out there and warned that there's going to be some pain ahead as the Fed continues to bring down inflation.
While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation.
You don't say. There's going to be some pain. We know that. I've been talking about this for a very long time. I've talked about the market dynamics and how they've changed. And I'm going to go granular here in a minute to talk about exactly what that shift looks like in my local market. I don't think there's anybody out there right now that is unaware about the fact that we are in a recession. Additionally, inflation has gone berserk. I've done lots of videos recently talking about the market dynamics and how they've shifted in my market, how the supply side has exploded, how the demand side has diminished, how the mortgage rate market has made it a lot less affordable to go out there and buy a home. I'll be very specific because in one of my last videos, I showcased the home that we have for sale. I showcased the price that we listed it at. And since then, we're talking about 3 days on the market. The seller reduced that price $75,000. Now, full disclosure, he didn't list it where I told him to list it, and he's still above where I told him to list it at. But nonetheless, the fact that there were absolutely no showings, no phone calls, no interest, in spite of tremendous world-class marketing, made it very clear to him that everything I said when we met was true, and he's terrified that he will miss the market. Well, I'm not going to allow him to do that. We did an aggressive price reduction, at least relative to where he thought it should be listed, still a little bit over where I suggested it should be listed at. But nonetheless, that $75,000 reduction created some showings, which I think illustrates what I've said in many other videos, that homes that are priced the right way in this market will sell. Buyers are buying. The days of multiple offers and waiving contingencies and paying over ask and multiple offers and 50 or 100 people interested in your home, those days are over. So fortunately, he let me do my job. We now have some showings. It's yet to be determined where the price will sell. I know we're priced well enough to start to get showings, which is a good thing for him because if people are not laying eyes on the property, ain't nobody buying the house. And why it's critical that you hire a real estate professional that absolutely knows the market inside and out so they can advise you how to price your home the right way and get the most money possible. All right, so Pal's out there, he's talking about there's going to be some pain ahead. Let's get more granular into what that looks like. The instant pain was felt by investors. The S&P plunged 3.5%. The stock market is an anticipatory vehicle. It will react in real time to good news or bad news, and it will trade constantly. The real estate market doesn't work that way. It takes a lot longer for economic conditions and or bad news to impact the real estate market. So the first people who get to feel the pain are the investors in the stock market. If you happen to notice what the market has done over the last few years, it's very obvious what the market thinks about the economic conditions. and what it thinks about corporate earnings and what it thinks about the future. Stock market prices this in instantly, and you get an instant reaction reflected in the value of your investment instantly. That's not how it works in real estate. That's not how it works with home values. Unfortunately, I wish it did because I like that fast pace. But that's not how real estate works at all. It's a lagging indicator. It's the last metric to move as the economy deteriorates. But make no mistake, the economy is deteriorating. It's happening right now. The last few times that I've gone to Target, I've been amazed by the insane amount of sales that they have going on. Almost everything they have for sale seems to be 50% off. Honestly, it looks like a ghost town when I go in there. My curiosity got the best of me, and I started talking to one of the employees that was there, and I asked him a question. Is the store always this dead? It seems like you're having a lot of sales these days. What's going on? And the employee, who was a little bit younger, proceeded to tell me the store's been dead for months. They're terrified that they're going to lose their job. They're terrified that their roommate's going to lose their job. And they're afraid that they may be at risk of not being able to pay their rent. I suspect that truth is real in lots of other places. So make no mistake, there is going to be a lot of pain. Unfortunately, the people who are going to feel that the most are the ones who have the least amount of money, but they are going to get squeezed. And it's impossible for them not to. Make no mistake, nobody is totally insulated from that. And I believe there are lots of people that are out there in my market, which I know I've said a lot in the past. I feel like our markets are insulated relative to other places in terms of values going down because there is no more land, because there is still so much demand from people around the country and around the world who want to be in this area. And I believe that gives us a buffer. But the truth is, within my market, there are plenty of people who have tremendous incomes that spend above their means. So if you make $1 million and you spend 1,200,000, you're broke. No, you're not broke. You're 200 in the hole. I know for certain there are lots of people within my market who live that way. So it's only a matter of time until the rubber hits the road and the people who are living above their means start to feel the pain. And when they do, they will be forced to sell. And it's really just that simple. That's what's going to happen. Now, many of you ask me, when do I expect this to happen? When do I expect the market to crash? When will it happen here in my market? Well, the truth is, nobody knows. My suspicion is it's going to take 18 to 24 months for the pain to become so unbearable that the only and best solution is for them to sell their home. Now, if all that happens at the same time, it's going to create a massive spike in inventory of homes for sale, period. Now, as I mentioned, that's 18 to 24 months from now. Well, in the interim, the supply side has already exploded. We're already either in a neutral or a buyer's market in South Palm Beach County. So 18 to 24 months from now, what do I think that looks like for the people who are really in distress and must get cash in hand to live? I think they're screwed. What I think is totally irrelevant, but the market will be right. So just like the seller that I talked about earlier in this video, what I think about the market, nobody cares. What you think about the market, nobody cares. What anybody thinks about the market, nobody cares, because at the end of the day, your home is only going to be worth what a buyer is willing to pay for it. And based on what we're seeing right now in terms of the economic conditions and future forecasting, I suspect there's going to be a lot less buyers that are going to be willing and able to pay a premium for a house, especially if they've got lots of choices. Now, I don't share that to scare you. I share that because I'm telling you the truth. That's what the market will look like at some point in the future. But for today, here's what it looks like. Now, I'm not trying to talk anybody out of doing something that they want or need to do now, because in spite of everything I just said, which is true, the truth right now is, if it's right for you right now, you've got clarity on your timeline and finances, then you can score a deal right now and max out South Florida living to the fullest. But typically those buyers are fairly affluent. A lot of times this is not their first home, it's their second or third, but they've got the ability to buy what they want when they want. Buyers who can buy right now in this market are getting what they want, and they're getting deals that they are happy to live with no matter what happens in the future. But I realize that's not every buyer and that's not every market. That's what it's like right here, right now, irrespective of economic conditions for the right buyers. But rather than continue to pontificate about what the future pain might look like, let's see what the pain is right here, right now on Main Street and for small business owners. And right now, if you're a small business owner, chances are you are feeling the compound effect of a lot of negative things: inflation, labor, transportation, energy costs, inflation decimating your margins, and business is not good. Here's what that looks like in real terms: 40% of small businesses, as you can see by this chart, can't afford to pay their rent in August. That ain't good. And I suspect if they can't afford to pay their rent in August, it's only a matter of time, if it's not already, that they can't afford to make payroll. When you can't afford to make payroll, chances are you're out of business. So are all the people who work for you. And that sucks. And those are the leading indicators that I'm looking at right now to understand what is certainly going to happen at some point in the future. At some point in the future, when inflation and unemployment gets so high, many of them are going to get forced out of their rentals. Many of them are going to tap out of their home and hopefully have enough cash to survive, thrive, and be happy. But make no mistake, the unintended consequence of all the things the government has done ever since they started printing money 100% guarantees that these things are going to happen. There are lots of people out there that will look at charts and interpret the past to get a sense of what this next recession might look like. The truth is, there has never been a recession or any economic cycle in the United States that's similar to this. The things that have happened, the government stimulus and policies that have happened, up to and including recently with Biden talking about the student loan forgiveness program, they all sound good in theory, but in reality, they're a disaster. And we're already feeling the inflationary pain because of it. It's going to get worse. And that's just the truth. Will it impact everyone? No. Well, it's going to impact everyone on some level, but is it going to impact everyone the same way? No. It's going to squeeze a lot of people and it's going to bring a lot of pain. And yes, I'm a real estate professional, so I'm obviously not trying to scare you or talk you into or out of doing something. I almost feel totally protected by this because I know as a real estate professional, it's always a good market for someone and that cash seeks its highest value. So, irrespective of market conditions, if you're a real estate professional watching this, there's really nothing to be worried about as long as you know where and when to pivot and whom the market is best for. And then go and serve and support them at the highest level. And if you are a real estate professional and none of that made any sense to you, you're not going to be a real estate professional for much longer. Which brings me back to Lawrence Yun, the chief economist for the National Association of Realtors, who is out there on the record as stating, and honestly, sometimes some of this information, some of this news or noise or whatever you want to call it, misinformation, I feel like these people are talking out both sides of their mouth. And I'll show you exactly what I mean here.
While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses.
But according to CNBC, in headline news, a housing recession won't bring home prices down, economist says. I don't know how to say this any other way. That might be the dumbest thing I've ever heard. A housing recession absolutely will bring home prices down. Period. End of story. And I suspect this kind of headline news is why most people hate realtors in the first place. Now, if you hate realtors, please let me know in the comments down below. It's okay. I'll forgive you. And I'll also operate from the standpoint that whatever your bad feelings associated with realtors might be, it certainly doesn't apply to me. But just know, no matter what you think, you're getting nothing but love from me, babe. I realize this is a long video, so I want to thank everybody for watching this so far. I hope you found this content valuable. I can also see in the analytics that many of the viewers who watch this channel are not local. If you are local, please tell me where you live down below. And if you've got any questions about the market conditions in your city or subdivision, really, if there's anything I can do to help serve and support you, please leave a comment down below and I will absolutely answer your question and connect if you'd like me to. Separate to that, you are out of my market. You'd like to be connected with a real estate professional that I know, that I like, that I trust, someone that I've personally vetted, that I know can serve and support you at the highest level, irrespective of market conditions, then please click the link down below and I will connect you with a professional right away. And if you're totally unfamiliar with South Florida and you'd like to know about every city within South Florida, then please opt in for our city/relocation guide. It's going to tell you everything that you want to know about every city within South Florida. And please don't sleep on the playlists. Playlists that exist within this YouTube channel are built out with hundreds of videos that showcase exactly what it's like to live in almost every city and many subdivisions that exist here in South Palm Beach and Broward County. So if you'd like to experience what it's like to live in those cities, please check out those playlists. Please check out those videos, and I suspect that you'll love them. Now, if there's a city or a subdivision that I have not covered and you want me to, please leave that in the comments down below, and I'll be happy to create content around whatever city or subdivision, or really anything that you'd like me to, because I'm committed to creating the most comprehensive content that exists out there so I can serve and support you at the highest level. All right, so as of Wednesday of this past week, the 24th, Forbes is out there and their headline news is this: is the housing market collapse over? Pending home sales suggest that an end may be near. I don't know who wrote that article. Yo, Chuck, they must be on the pipe.
Yo, Chuck, they must be on the pipe, right?
Right? Shout out to Public Enemy. It is inconceivable to me that anyone out there who is not on drugs could write this headline news. And I have no idea where they're getting their data from, because the truth is, pending sales in my market are down significantly. And home values in my market have not declined whatsoever. What has declined are the insanely overpriced listings that should never have been listed that high in the first place. But in terms of actual values of homes, those have appreciated month over month, year over year. And while some of that depreciation is starting to decline, I haven't seen anything that resembles a decline yet. Now, that doesn't mean it's not going to happen, but it hasn't happened yet. Now, as I mentioned earlier in the video, real estate tends to be one of the last chess pieces to fall in the economic cycle. Well, I want to be very plugged into what's happening in terms of investor money, because the institutional money, the big players, the strong hands that exist in the market typically have access to better information. At least I hope they have access to better information than I do. But watching what the smart money, the institutional money does, it gives me information. So if big institutional money is going out there and buying up all kinds of real estate and turning them into rentals, that tells me they're betting on the strength of the market. And inversely, equally and opposite is true. If the strong hands, the big institutional money that's out there is dumping their homes and exiting the market, I want to know about that. If they're dumping everything and they're liquidating and they're moving to cash, it tells me what they think about the strength of the market. Now, you can see right here, the housing correction intensifies. Blackstone to stop buying homes in 38 regional housing markets. Now, to be clear, it doesn't say they're selling all their homes in those markets, but it does say they're going to stop buying homes in 38 regional markets. Now, I'm not going to go granular and make you read the whole article, but I'll tell you, South Florida is not one of the regions that they're doing this in. As a stockbroker, if I'm building a position for an investor, for a client, or for myself, I want to know everything there is to know about that position that I'm betting on. And so does Blackstone. So back in the day when I was doing this professionally as a stockbroker, if a position or a company that I was buying aggressively and building a position in, if it went down, it gave me an opportunity to add to my position. And stocks go up and down for all kinds of reasons, or sometimes no reason at all, just because of trading. Bring this back to real estate and bring this back to what we're talking about as it relates to the housing market and trying to make predictions. Blackstone is not dumping their position. They're just not buying anymore in certain areas. Well, to me, that's prudent, because not every market's the same. And the 38 markets that they've stopped buying in, I wouldn't be buying in either. And make no mistake, there are going to be lots of different markets that get hit hard. Doesn't mean that everything is going to get hit hard, but it does mean they're being prudent. They're minimizing their exposure to future market conditions, and they're minimizing the risk to new money being added to the market in places that they feel present the most risk. So at first glance, this looks like a negative article, but to me, it's kind of a non-event. And when you see the next article, you'll understand why. Because they're buying every other piece of real estate in different asset classes that they believe will add to their bottom line. So while they may have paused in some markets, they're still out there deploying $280 billion in everything from warehouses to campus housing to biotech lab space. But I suspect they're making smart business decisions based on the best information that they have, which is current right now. And here's what's current right now as it relates to foreclosures. Now, I am fully aware there are plenty of people out there, plenty of content creators out there. They're taking real data and, in my opinion, misapplying it completely to create very compelling, very entertaining content. I just see it as a scare tactic for more watch time. But I've seen tons of content creators that are out there talking about foreclosures exploding. Well, it's not really true. The data does not support that. And the numbers don't lie. In spite of the changing economic conditions, in spite of the rampant inflation and all the other things that really do exist in the market, in July, foreclosure starts went down 25% from June. And the number of loans in active foreclosure declined by 6,000 in July. So, contrary to the popular myth, foreclosures aren't exploding, they're actually declining. And that's what the market looks like right now as it relates to foreclosures. That's where we're at right now, but that certainly doesn't mean that's where we're going to be forever. So when that number changes, or really when any of these numbers change, I will always tell you the truth. I'll always be totally transparent so that you can make the best decisions for yourself, for your family, and for your financial bottom line. We've covered a lot. I appreciate that you've watched this long, but I wouldn't be doing my job if I did not share what the market looks like right now so that you know. This bar graph represents single family homes in Palm Beach County. The light green bar is homes for sale. The dark green bar are homes that sold. And I hope it's obvious there's a massive uptick of supply. So if you're thinking about buying, you've got way more leverage, way more options, way more choices. There's far less competition. You most likely can negotiate a deal much better than you could have in the recent past. Now, this graph is the big picture. It's Palm Beach County in totality, but it should be obvious what a massive jump we've had. 52% to be exact. But we went from less than a month of inventory to almost 3 months. Yes, it's true. We are still in a seller's market. We are very quickly approaching a neutral market. And I suspect we're going to blow past that and go into a buyer's market. But it's important for me to be totally clear. This is the big picture. The competition and the supply of inventory can be very different within the markets that exist within the big market. So it's critical that you understand the market dynamics of wherever it is that you live or wherever it is that you're thinking about buying in order to know how to govern yourself accordingly. Now, if you're local and you're thinking about selling, then please opt in for our seller's guide. It's going to tell you everything that you need to know right now in order to max out the sale of your home. Please opt in. We will connect, we will reach out, and we will find you the one buyer on planet Earth willing to pay more than anybody else. If you're thinking about moving to Florida or buying a home in Florida, and you're one of those frustrated people who is out there writing contracts, continuing to lose, not getting what you want, and left the process feeling defeated, please know that hope is back on the balance sheet. It's going to tell you everything that you must know about buying a home here in Florida. You will find your dream home and we'll get you the best deal possible. Truly hope you found this content to be valuable. And if you did, please let me know in the comments down below. And more importantly, check out my next video because I suspect you're going to love it a lot. And if you're even thinking about moving to or living in South Florida, you've got to give me a call, text, DM, send a carrier pigeon, a smoke signal, by any means necessary, because we've got your back when it comes to moving to or living in South Florida. And until next time,